There's a lot that can go wrong along the
Mm.
way, which is why it's important to know what you're doing. Very important to avoid personal risk. Um, and you've got to get it right. You've got to buy the right business in the right way, with the right legal advice, with the right financial advice, all of those things. But the principle of growth in what I describe as kangaroo leaps rather than little bunny hops. The bunny hops would get you there maybe one day eventually, but the kangaroo leaps is how can we double our sales overnight? How can we then triple our sales? How can we become the largest in our sector just by doing half a dozen acquisitions?
Welcome to 7 to 8, our special series on 7 to 8 figure entrepreneurs. In this special series, I interview $1 million, some $10 million, and even some $1 million business owners who uncovered their twists and turns in their entrepreneurial adventure in order to help you to avoid the potholes and stick to the fast track. Welcome now to center stage, our next special guest. Hey there, peeps. This is Michelle Nedelec, and I am super glad that you're here with us today because I am here with my most amazing guest, Jonathan. Jonathan, thank you so much for being here with us today.
Thank you for having me.
Awesome. So give everybody the highlight of who you are and what you do for business.
Yeah, sure. So 24 years ago, I first sold a business. And since then, I've bought and sold over 60 businesses. I did my first private equity sale in 2007. But I've bought businesses from private equity. I've turned around struggling businesses. Not my favorite thing to do, I must admit. If you don't want to sleep well at night, that's certainly something to keep you awake. I bought a lot of businesses during the pandemic. Again, not something I would necessarily advise people to do. And for the last 7 years, I've helped other people, mostly owners of businesses, buy other businesses as a way of expanding. And my speciality is helping people do that without risking their own capital. So without reaching into their sort of piggy bank and borrowing against their real estate. So buying businesses, usually quite sizable businesses in the millions of dollars of revenue, without putting any personal money into the deal. So funding it 100%.
Nice. I love it. So my first question was going to be, and how'd you get into all of this? But you went over that and who do you serve and support? So when it comes to buying businesses and selling them, one, let's kind of get to know you a little bit here. What fascinates you about business in general, and particularly the whole acquisition and process?
Sure. So I always wanted to be in business, even as a teenager. I was the teenager who went to the school principal and said, we need a shop, a school shop for break times, and I was the person who went and got all the stock from the from the what we call it cash and carry, and left class 5 minutes early before every break so I could set up the tables and the school shop. So it's always been an interest of mine. I find business owners and entrepreneurs um, very interesting. I think if you're in a room full of business owners, there's never a shortage of anything to talk about. You can operate very different businesses, but you've got a massive commonality, which is your success is 100% dependent upon you. And I've always believed in taking full responsibility for your life, and if you don't like it, you should change it, and take responsibility for the life that you have. And business owners do that every single day. When it comes to business acquisitions, I found that my most successful periods of business have been when I've been buying and selling. That's just the way it's always been. So I'm an advocate of growing via acquisition because you can just reach your goals a whole lot faster than running more Facebook adverts or hiring more salespeople. Yeah, if you need an extra $1 million of sales, go and buy a business that's similar to yours that has $1 million in sales, and there you go, you've solved your problem.
I love the simplicity of how that sounds. So let's get
Oh,
into
it's
the actuality of what it
you can
takes.
do it with your eyes closed, of course. Yeah, of
I
course.
love this. That's
There's
awesome.
so much to it. I mean, it's there's a lot that can go wrong along the
Mm.
way, which is why it's important to know what you're doing. Very important to avoid personal risk. Um, and you've got to get it right. You've got to buy the right business in the right way, with the right legal advice, with the right financial advice, all of those things. But the principle of growth in, what I describe as kangaroo leaps rather than little bunny hops. The bunny hops would get you there maybe one day eventually, but the kangaroo leaps is, how can we double our sales overnight? How can we then triple our sales? How can we become the largest in our sector, just by doing half a dozen acquisitions?
Nice. So let's kind of back up the bus. What position does a business have to be in order to start looking at the potential for acquisitions? Or is it just something that an entrepreneur can go, hey, I don't really want to start a business. Let's just go buy one.
Yeah, so my clients typically are a mix of the two. So they're business owners who want to grow by acquisition. There's never a right time to do that. You can buy businesses bigger than yourself. It's not dependent upon your current size. And then 50% of my clients are people who are entrepreneurially minded. Maybe they're currently in corporate life, want to get out of the rat race. Maybe they are a property investor, a real estate investor, and want to do something that maybe has a better return. In the UK at the moment, property investment, real estate investment isn't getting a great return. So a lot of people are saying, well, how can I take my skills and my knowledge and apply this to business instead? So there's nothing stopping anyone, because if you aren't using your own cash, your personal wealth has got nothing to do with your ability to buy the business. Because what most people think is, how can I afford it? So they think, well, I'd love this idea of buying a business, but how can I afford it? That's actually the wrong question. A far better question is, how can I fund it? How can I finance it? And then it's a completely different set of answers, because now we're looking at different funding and financing methods, as opposed to, how much money have I got? How can I afford it?
Nice. So let's delve into that. What are the ways that somebody could fund a business that's not using their own equity? And what are those methods looking for in order to be able to make that concrete?
Yeah, usually it's not one method. You're
Okay.
not doing one thing to finance the acquisition. You're doing several things. I call this the deal jigsaw. So the deal jigsaw is where we've got all these different pieces, and we need to fit the pieces together to get the result that we're looking for. So if the business has assets, fixed assets like real estate, plant and machinery, then we have asset finance as a real go-to method, because we use the assets of the business as collateral for the loan, and it is relatively easy to get that type of finance, because the collateral is there in the real estate or the fixed assets. If the business sells to other businesses, then we have what we call invoice finance, where we finance the accounts receivables, and we can use that as part of the deal jigsaw to piece together the deal. There's good old seller finance, where the seller effectively carries a note. There's for a percentage of the business, and that's a great way of getting a deal over the line when your other financing pieces don't always fit together perfectly, and there's a little bit of a shortfall. We can use the cash in the business as well. In many countries throughout the world, there is a tax advantage when the seller of a business receives payment for the sale of their stock, their shares. And we can use that tax advantage to help the seller get a better deal than if they took the cash in the business out of the business prior to selling it. So we take all these different pieces and we fit them together in different percentages to get us to where we want to go. And sometimes even then we can't get all the way. So we can build in some sort of variable compensation that depends upon the future success of the business. And anyone selling a business is always telling you how wonderful it's going to be next year. Well, in this case, they can put their money where their mouth is, and we'll pay them more if it is wonderful, but we'll pay them less if maybe they've exaggerated a little bit. So so it's a case of choosing your tools, if you like, to do that particular job, and piecing it together to get the deal done.
Nice. And what would make somebody want to sell their business when they have a good thriving business that's sellable?
Yeah, the only business you should buy is an established, profitable business. And then people always think, well, why would someone sell an established, profitable business? Well, the
That's
number one reason is retirement.
fair.
You can't run it forever. When people get to retirement age, and that's obviously different in different people's minds as to what that might be, then there's a succession issue. You know, in the old days, people would always pass their business to their children. But these days, people follow very different careers to their parents and don't necessarily want to do exactly what their parents did. The number two reason for selling a business is ill health. The number three reason is a combination of retirement, age, and ill health. So these are reasons other than money. And that's always interesting for people because they think that surely anyone selling their business wants maximum return. Well, not necessarily, because if you're buying an established, profitable business, that business has made good money for the owner over a long period of time. And during that long period of time, the mortgage has been paid off. The children and the grandchildren have been looked after. The owner has gone through the phase of driving fast cars. That doesn't really interest the 65-year-old so much. And now it's a case of retirement because they've done what they needed to achieve financially. What I've found, and this is an interesting counterintuitive point, is that the people who have the weakest businesses, the businesses that aren't really making much money, the businesses that are living on a prayer and that they might collapse any moment, they're so fragile. They're the people who want the largest amount of money for their businesses. It's almost like I haven't made any money for 10 years. So when I sell it, I need to make all my money at that point, which is kind of the wrong way round. But the easiest people to buy from are the people who have established profitable businesses who want to retire.
Wow. And is there any industry in particular that happens to be kind of phasing in right now, or is there kind of any trends that you can see?
Yeah, I mean, industries are it's difficult because every industry has successful businesses and unsuccessful businesses. So when someone says, "Is this a good industry?" It's like, well, you're not buying an industry; you're buying a business in an industry. But the usual rule of thumb are boring businesses that aren't exactly going to set the dinner table conversation alight. The businesses that you don't even know exist, that just are there doing stuff, making things, manufacturing things. What you always want to avoid are the businesses that do things that sound very, very exciting. The person who's got the app, for example. If it's got an app, it must be an exciting business. Well, usually it's free revenue in that it's not making any money, and you don't get many 65-year-olds of retirement age owning apps. So if you think about more traditional businesses, they're the businesses that we want because we aren't creating a job for ourselves. We're not going to be there every day managing the business. We want the business to carry on as it has done for many years, and we want that business to produce income for ourselves because that income for ourselves is the reason why we're doing it. And if that business just ticks over making $2, $3, $4, $5, $6 million a year, then why not? Why not just let it continue running and quietly take those profits?
Nice. So what kind of skill sets would somebody, either aptitude or skill or something, to say, hey, I really want to go out and buy a business too, and go, and I think I could actually do it. Is it because they have their MBA, their backgrounds in business, they've been running businesses before? Like, how does that
Yeah,
usually go
well,
down?
it's usually an ambitious person. So it's someone who's got drive, who's got reason for doing it. And you might think, well, surely everyone who you meet, Jonathan, has that ambition. Not everyone. I mean, I actually, people come on my courses who say, well, I'm not really bothered whether I buy a business or not, which always seems to me rather strange. But you've got to have some ambition and drive. You've got to realize that, you know, there's a big benefit. There's a pot of gold at the end of the rainbow here. You've got to work at it, and you've got to put the effort in. So definitely people who are prepared to put effort in, because there is effort involved. There'd be lots of cups of coffee, lots of meetings, lots of Zooms, lots of conversations. It's going to be frustrating at times. You might feel like giving up, but it's worth it in the end. I've also found that curious people who ask lots of questions, people who are curious about other people's businesses, and people who have likable personalities. If someone doesn't like you, they will not sell you their business because they don't like you. They would rather sell their business to someone that they like. So if you've got a likable personality, that places you ahead of all the people who maybe don't have that advantage.
Right. And are there people that would be willing to kind of stick around and mentor and go, yeah, this is how I ran it, and will phase me out and phase you in order to be able to,
Yeah.
because I'm assuming that a successful, but if you took two businesses side by side, whether there was a plumbing company or a chair manufacturing company, there's going to be a certain way that they do it that made them successful. And,
Yeah.
throwing a wrench into that system is
Yeah,
probably not the best idea.
The rule of thumb when you buy a business is you don't change anything, because sometimes businesses can be quite a delicate balance, and you start, you know, you change the price and you change the product range, and suddenly you've actually got a completely different business. So the owner always stays on for a handover period, and that's an unpaid period where they are basically handing over the business effectively. And my inclination always is to keep the owner on as long as possible, because a hard stop where on this date they've gone is never good for the customers. It's never good for the staff. And I think that as the longer you can have someone stay on, as long as they're not disruptive, the better. And you know, I've done many deals where the owner has left on the day of completion, and it really doesn't work for many staff and customers from an emotional perspective. They almost feel that something is wrong, that, you know, we've known Jeff for 10 years, where's Jeff gone? It's far better that Jeff is there for at least another 6 months, and then Jeff says, oh, do you realize that 6 months ago I sold the business? I didn't realize that you did that. Oh yeah, you didn't notice, right? So nothing's changing. And that segue, that gentle transition, will get you a better return on your investment.
Right. And do you notice that most of these companies that are looking at selling, are they kind of CEO, say heavy? Like, do they have a day-to-day part in the business, or are they pretty hands-off and going, yeah, everything's running smoothly, I don't really need to be here? How does that
Yeah,
work?
so you've got there's sort of two routes really. You've got the owner manager who is in the business every day, an integral part of the business, and that usually is a smaller business, because yeah, someone who's got the control over every aspect of the business can really only control a small business. When you get above a certain level, and it's going to be different for different sectors, but once you get to a certain size, and that business then has someone who looks after the finance, someone who looks after the operation, someone who looks after the people, someone who looks after the manufacturing, whatever it might be, then that management team allow the business to grow further beyond what the founder could have done by themselves. And that is actually an easier business to buy, because you've spread the responsibility for running the business across 4 or 5 or 6 people, which means that if one does leave, you've still got the other 4 or 5 of them. And also, yeah, it's not dependent upon one personality. And that's important. With smaller businesses, and smaller businesses are quite hard to buy. In actual fact, it's easier and faster to buy a larger business than it is a smaller business. Easier to finance as well.
Okay, so you've almost got me intrigued to the point that I'm like, hey, this sounds like a career unto itself. Yeah. So and when you say that you've gone through more during the lockdown than you did prior to, is it almost like buying and flipping houses or real estate in the sense of it becomes kind of a system that you have, and then you just apply the system, all of a sudden it starts working. Great, we sell it and we can do it again.
Yeah, I mean, yeah, I don't have many clients who buy and sell very quickly, to be fair. It's typically buy and hold, and that could be for a number of years, or buy several businesses and put them together in some way to create a larger business. And then, for example, I had a client who sold last year, and it was exactly 4 years from the very first acquisition to acquisition number 20. And that was the point where he got an incredibly good offer and did a deal, an 8-figure, really, really good deal, in just a 10-week time frame, quite an exceptionally fast time frame. I don't think he slept for 10 weeks, but I mean, it was a very fast time frame. And he's actually doing it all over again already. So when you when you compared it to real estate, flipping houses, it's probably not really a direct comparison. No.
Okay. But that, and it does sound incredibly intriguing. So with this, that example that you had of your one client, I just want to kind of go through that. Was he acquiring businesses for the purpose of building a business, or was it acquisition of multiple companies that ran kind of independently?
They were all in the same sector, so they were all
Okay.
very, very similar businesses doing very similar things. So in different parts of the country. So the back office was consolidated, but the individual businesses continue to operate in their space, in their locality.
Fully independent.
Yeah.
That's fascinating.
Well, independent in the terms of they're operating in their location,
Yep.
but clearly sort of reporting to head office in that sort of in that sort of structure.
Right. Because I'm assuming he wants to minimize his daily input into all of these things and start systemizing, what works over here,
Well,
we'll continue to do it over
he
there.
got it really right, actually. So what he did was he hired a CEO quite near the start of that acquisition journey, and he ended up with over 900 staff. And 900 staff is is going some, but he didn't have anything to do with the day-to-day operations, which meant that he wasn't quite as stressed as he would have been if he'd been managing 900 staff.
Right. So what kind of things are you looking for in a client that you're going, yeah, I'll take you on?
So, so my clients typically split into two groups. So, people that own businesses who want to grow their business by acquisition. So they want to buy similar businesses, complementary businesses, supply chain, the same business but in a different part of the country, and they want to grow that way. And then 50% are people who come from corporate life, who have had enough of making money for other people. They want to do it themselves. They've got an entrepreneurial spark, and they have researched starting a business. And yeah, I've started businesses from scratch, and it's worked fine for me. But we know that it's really hard work. It doesn't always prove successful. It looks like a far more de-risked model to go and buy a business that's established, profitable, been running for 20 years, and let's hope will continue to run for another 20 years. So those are my two categories, if you like, the business owners and the entrepreneurially minded corporate type.
Nice. And what does it look like when they engage with you? Are you doing trainings with them? Are you holding their hand through the process? How does that work?
Yeah, so I've got some entry level programs that we do on Zoom, and so we have people from all around the world. I'm actually running one this week, and we do this on Zoom. And then I have longer development programs with a smaller number of people where I help them with their first deal. And that help can be anything from helping them choose the right business to buy, all the way through to sort of giving them that moral support to get the first deal done. The first one is always the hardest, you see. That's where you need the most help.
Absolutely. So can you give us an example of a Cinderella story? I mean, you give us the one of your client who had
Sure.
the 20, but give us an example of what it might look like being able to work with you.
Yeah, so one of my favorite clients is Phil from Scotland, And Phil joined my 12-month, my longer program last year. And in June of last year, he completed on his first deal. And it's a trucking and transport business, £7 million of annual revenue, making £1 million of annual profit. And Phil was absolutely delighted with this. He paid £1.7 million, not a penny of his own money. And what Phil didn't tell me until sometime later was that at the point that I first met him, and the point leading up to this acquisition, he was actually unemployed. And he was a single parent, unemployed, living in a caravan, and he had very little money to his name, as you would expect. But he had the drive and the motivation, and his daughter was part of that drive and motivation. And Phil is not just completely transformed from to a business owner of a substantial business, is completely transformed him as an individual. And I always say that when you buy a business, it's not just buying the business, it's the person you become in the process of buying the business.
Absolutely. That is awesome. So how do you go about finding businesses like that?
Sure. So the worst place to find a business to buy is in
Facebook.
places where, well, yeah, Facebook, yeah, absolutely. Facebook, you're probably right. That probably is the worst place to find a business to buy. What I was going to say is where they're advertised for sale. So business brokers, business brokers like realtors for businesses. And the reason why is because there's lots of competition. Lots of people looking at the same business, which creates a competitive auction type. The price goes up. And quite often business brokers can exaggerate to an owner what they will achieve for their business because they want to get the instruction. They want to sign up the client. So they say, oh, well, you're going to make a fortune from this business, when unfortunately the reality isn't necessarily the case. So what we always do is outreach to business owners, and we don't know at that point whether they want to sell their business or not. We've got no idea. So we have to contact hundreds, maybe thousands of businesses and ask them if they're interested in selling. The people who are going to phone us. So we just go out. I don't like using this phrase, but effectively it's mass marketing. We want to go out to lots and lots of business owners and say, are you interested in selling? We have to do it in a slightly more persuasive and an authentic way than just saying, are you interested in selling? But the people who are going to contact us. And that's when we take them through a system, take them through a process. And actually, I've got this here from the training I was doing earlier, but I've got this process that you go through, and you take people through the process, and at the other end, they're either a business that you own, or maybe it's a business that you say no to.
Very fun. So what are some of the stumbling blocks that somebody might be having as they're listening to this? Maybe they've tried to acquire some businesses before, maybe their business is struggling, but what kind of things are they going through that they're thinking, oh my God, Jonathan, I need you so badly?
When people struggle during the business buying process, it's because, number one, they don't have any support, so they haven't got anyone to ask. I mean, who do you ask? You can't even ask another business owner, because so few people have actually bought businesses. You don't know anyone who's done it, so you haven't got anyone to ask. And then you haven't got this system. You haven't got a process to follow. So you're making it up as you go along, and you're watching a YouTube video and listening to a podcast and hoping that you'll absorb the knowledge and information and be able to sort it out. And then on the internet, there's so much conflicting information, you don't know who to listen to. So what happens is you just get very confused. The process takes way too long. The longer a business buying process lasts, the less likely it is to be successful. So it usually doesn't happen. Where the people who are successful have plenty of support, they have absolute clarity and focus on what they need to do, step 1, step 2, step 3, and they go through the process, and out the other end comes their first business acquisition.
Nice. Love that. So I know our listeners are going to want more from you. How do they start their journey with you?
Well, contact me on LinkedIn. So find me on LinkedIn, Jonathan J on LinkedIn, or find my YouTube channel. There's over 200 videos on buying a business, the majority of which are me interviewing people who've been on my courses about the businesses that they bought. So you can meet real people, not just listen to me, meet real people who've actually done this under my instruction. And you just type Jonathan J into YouTube, and hopefully I'll come up somewhere near the top.
Nice. We will, of course, have all of your links in the show notes. So peeps, you can scroll down, click on the link, go connect with Jonathan on LinkedIn, but do it in another browser because we're not done yet. So, because you have me fascinated in a way that I don't think I ever have been before. Property was an interesting kind of commodity to me, but I never really thought of business as a commodity unto itself. And I don't know if I'm quite at the point where I'm jumping in with both feet, but certainly wanting to get closer to the beach, if you want to put it that way.
Okay, well, check out my YouTube channel. I think that once you hear, I mean, if you spend enough time on it and you watch like a dozen videos of people who've done this, you'll start to see that really anyone can do this in any situation, in any sector, in any country.
Nice. I love it. So I get to ask you, at what point in life did you know you were special kind of crazy enough to think that you could become an entrepreneur?
Oh, definitely when I was a teenager. Yeah, I was slightly helped, but my parents had their own business, so that was I didn't see anyone do the 9 to 5 in my household, which is why probably I've never done that myself.
That's awesome. What was your first business, if you don't mind me asking?
First business, yeah, okay. First business, I did. No one's ever asked me that. I did
Yeah,
magic shows at children's birthday parties. I
fun.
was like 12, 13 years old.
Oh, that's awesome.
Long time ago.
He's going, I don't do that.
Don't ask me to show you a trick. It was a long time ago.
And have you bought any magic companies or
I
companies
haven't. No,
related?
I haven't.
Maybe it's
Such a
something to
long
look
time ago.
at. That's awesome. You have been absolutely awesome. Any last words for our peeps?
Yeah, success in buying businesses is really the same as success in life. It's about deciding on a goal, focusing on a goal, deciding the steps to get to that goal, and then just taking the first step. And I see so many people who don't take action; they don't take the first step. And the more they analyze it, the more they don't take that first step. So if you move out of inertia into momentum and actually start doing things, you'll find that a whole new world of business and life opens up to you.
Awesome. Thank you so much for your time. I appreciate it, and I know how valuable it is.
Thank you very much for inviting me.
This is Michelle Nedelec. Thank you for being here with us today. Be sure to subscribe to the show and share it with your friends. We love helping entrepreneurs grow. Thank you for listening to 7 to 8. If you're interested in upping your speaking game, be sure to connect with our guests with the links in the show notes, and connect with me to see how we can help you get your tech done for you and help your speaking dreams come true.